But with this, let's also welcome Jahangir Aziz, MD and Head of Emerging Market Economist Research at JP Morgan, joining us on the show right now. Hi, very good morning, and thank you so much for your time. Firstly, help us analyze and help us understand that what are the big talking points for the market participants right now as per you, because that 9 July deadline has already passed. We are waiting for 1st August and still now no major announcements, or there are still so many pending tariff deals to be done. How as per you that the market participants will treat that, because of late markets are showing resilience?
Right. I mean, market clearly are showing resilience, and they are shrugging off the news set of the recent set of tariffs that have been announced. But let me make 2 points. First of all, August 1 is after July 31st. And I think the market has sort of, in all of this talk about the new tariffs and the Fed, etc., forgotten that on 31st of July, the Federal Appeals Court will start hearing the case of the appeal made by the government on the case that they lost in the U.S. Court of International Trade, which ruled that all the tariffs imposed under IEEPA, which includes all the universal tariffs and the reciprocal tariffs, the ones on which all the trade deals are done, is inadmissible. And therefore, depending upon what the appeals court does on 31st of July, or maybe it'll take a couple of days, it doesn't usually take more than that, because in the appeals court, none of these tariffs will become moot. I mean, all of these tariffs will become moot simply because they cannot use IEEPA, which is the act based on which both the fentanyl tariffs and the reciprocal tariffs are done. So in that case, we are again pushed into another months of uncertainty when the U.S. government then shifts away from the IEEPA tariffs and then moves into tariffs based on other parts of the Trade Act, Sections 301, Section 232, etc., etc., etc. The point I'm trying to make is that August 1st is a deadline that everyone is looking at. But prior to August 1st, the day before is July 31st, and the court case could have a meaningful and material impact on what we wake up on August 1st or August 2nd.
Lots to watch out for, in fact, when it comes to the tariff front. Hi, morning. Also want to get your sense on everything that's been brewing on the Fed chair front, because now that global macros, at least US macros in terms of inflation, seem to be in control. And now if still there isn't a rate cut like the street is expecting, do you believe that could lead to some rejig in terms of who could be chairing the Fed going ahead?
Look, that's a completely different thing, and it is very hard to get into that, entire discussion about it. But let me start with your first point. The first point being that, the inflation is under control. Well, if you look at goods inflation last month and take away autos have actually dampened down, largely because Japanese auto manufacturers have actually reduced price of the autos that they sell to their own subsidiaries, and as a result of which auto imported prices have gone down. But if you take out autos, goods inflation in the US last month, the last print that we have, was running around 5.5%. So, even though we've seen a significant amount of front loading of imports because of the tariff scare, we have seen a significant amount of shift away from China to lower tariff places like ASEAN, Vietnam, Malaysia, Thailand, etc. Even then, and in addition to that, a lot of firms are basically taking the tariff increases on their profit margin. As of now, you still have goods inflation, ex-autos running at 5.5%. So the transmission is taking place. It is clearly taking longer than what the market expected. We always expected that it would take 2 to 4 months before the tariff impact would hit inflation. So just because it is not showing up in the data, that does not mean it won't show up in the data. And I think the Fed is exactly in that same situation, where they know that the tariff pass-through will take place. It will take time. It will depend upon the dynamics of, well, whether the firms are first taking it on their margins and then they will pass on to the consumers. So I think that as far as the Fed is concerned, they will have to wait and see in at least the signs of the pass-through taking place and what happens to non-farm payrolls. And I know that the non-farm payrolls last month was a surprise, 147,000. But if you go behind the numbers, the private sector non-farm payrolls was at 74,000, one of the lowest in the last 2 years.
Yeah, absolutely. Jahangir, I want to talk about India because the only missing puzzle is what happens to tariffs. Well, India is holding ground. There doesn't seem to be any consensus just yet on how much tariffs is going to be slapped on India. Where do you think the situation is going to be headed?
So my guess is that because India hasn't received a letter as yet, at least the negotiations are going on. And that's a very good sign that, unlike Japan, Korea, and other countries who have already received the letter, and therefore, they have to scramble to start doing trade deals, at least the negotiations are going on. And clearly the negotiations are going to a point where the US is not basically saying, look, I've had enough of the negotiations. Here's the deal, take it or leave it. So that's a very good sign. Now, where will the actual tariffs sit? I haven't the faintest idea. I don't have the inside track. My guess is that India clearly is trying to protect its agricultural sector, which it should. I mean, that is a natural thing to do. I think India will probably be willing to compromise on the other sides. Other sectors. But again, suppose you do have a trade deal. Let's say day after tomorrow you have a trade deal. And then the federal court rules that IEEPA tariffs are not admissible and they uphold the US CIT court's decision. Then what happens to the trade deal? So my point I'm trying to make is that these trade deals are being made on the basis that the IEEPA tariffs will actually continue. But if that's not the case, and if the court most likely, even if the White House loses in the appeals court, they will go to the Supreme Court. So we'll have to wait and see what the Supreme Court does. But suppose even the Supreme Court says that the IEEPA tariffs are inadmissible, then none of these trade deals make any sense. I mean, what deal are you cutting?
Indeed, interesting take, Jahangir, over there, that just ahead of that 1st August deadline, there's a lot to watch out for. But Jahangir, this time, the way that the markets are digesting all this tariff news is a little different. This time, we're not seeing that much of a surge in the gold prices, in the dollar index, and the sentiment for emerging markets as well is holding up slightly well. But specifically on the dollar, help us understand how do you see that reacting or rather moving from these levels, and especially the move in the dollar index, which actually impacts the sentiment for the emerging markets as well?
Right. So the way I look at the US dollar versus 10-year treasury is based basically on my prejudice that I've only worked on emerging market countries, right? So think about, I'm not saying that the US is an emerging market country, far from it. It probably has the best private sector that you can think of. But setting that aside, so think about US, where US fiscal deficit in fiscal year 25 will be around 6.2, 6.3%. In fiscal year 26, based on the budget that has already been passed, will be around 7.2%. So almost a percentage point increase in fiscal deficit. And it's the same country that is turning around and saying that, look, we want to impose tariffs because we don't like our trade balance being so high. Trade balance this year, in fiscal year 25, is supposed to be around 4%. It is probably going to go down to about 3.5% because of the tariffs in fiscal year 25. So here you have an economy that is increasing its fiscal deficit by 1%. It is reducing its current account deficit by 0.5%, which means its foreign borrowing is going down by 0.5%. So it needs to find 1.5 percentage points of GDP of increased domestic savings from either the corporates or from the households. if this was an emerging market country, you would say that rates and yields, bond yields over here should go up and his exchange rate should come down. So the way I'm looking at it, again, I'm going to use my prejudice, right, which is that I've only worked in emerging market countries. That if I look at from those lenses, right, then yields should go up because you have a higher fiscal deficit and lower foreign borrowing. And to deliver the lower foreign borrowing, you need exchange rate, you need the exchange rate to depreciate. So put differently, that because of what the public sector and the US has done, regardless of the fact that it's one of the finest private sectors in the world, it is probably the finest private sector in the world. Regardless of that, what the government has done is essentially increase the risk premium on the country. And as we know, when risk premium goes up, yields go up and the exchange rate depreciates. So that's the way I'm looking at the dollar and US yields at this point.
Yeah, never a dull moment. That's what one can say. It's always an evolving and developing situation. But Jahangir, so good having you on the show. Thanks for your time today.